Hi dear traders! At the close of the previous trading week, investors were encouraged by strong macroeconomic data from the US. Markets cheered at the news that consumer activity in the country, which is considered the driver of the US economy, was rising despite high prices. Against this backdrop, the risk of a recession declined, and so did the expectation of more aggressive steps from the Federal Reserve. The US dollar index, which measures its value against the basket of 6 major currencies, retreated from recent highs, thus slightly easing the overbought status of the US dollar. Yet it still remains at its highest level in the past 20 years. In the middle of the previous week, the US dollar index surged above 109 amid the news about accelerated inflation, as markets expected the Fed to raise the rate by 100 basis points instead of 75 at its next meeting. But retail data released on Friday eased the growing tension. As for the euro-dollar pair, we should note the most important event that happened over the past decade. The quote of the most popular forex pair declined below the parity level. Traders are selling the euro mainly due to the difference in the policies of the two central banks, the ECB and the Fed. The European regulator is expected to raise the rate by just 25 basis points by the end of this month. This will be the first rate hike by the ECB in more than 11 years. Meanwhile, the US Federal Reserve is set to raise the rate by another 75 points after a series of hikes of 150 basis points in total, starting from March. In addition to that, the pressure on the euro is rising due to the political uncertainty in the European region. Recently, Italy's Prime Minister Mario Draghi has resigned. The UK currency is also going through a sell-off. Britain's Prime Minister resigned as well. Yet the pound has been losing ground since May as investors doubt the hawkish approach of the Bank of England and its ability to control inflation without harming the economy. In the crypto market, Bitcoin managed to recover above the key level of $20,500 per token. Last week, cryptocurrencies saw a sharp decline due to the inflation data from the US, as traders fled from risk assets. The current situation remains rather unstable. Brent crude has stabilized near the level of $100 per barrel. The outlook for the oil market is mixed. US President Joe Biden visited Saudi Arabia in an attempt to urge the kingdom to ramp up oil production so that oil prices do not rise further. Yet analysts doubt that any agreement could be reached, as the relationships between the two countries are rather complicated. The next OPEC Plus meeting is approaching on August 3rd, at which the cartel may well announce the increase in crude production. At the same time, most OPEC Plus members are already pumping out oil at their maximum capacity. Meanwhile, the price of gold dropped to a 15-month low of $1,700 per troy ounce. The main reason behind such depreciation of the precious metal is the strengthening of US dollar, as gold is denominated in this currency. Gold lost its ground even despite the looming global recession, as investors turned to the greenback as a safe haven asset. This is what the last trading week turned out to be, and we are looking forward to the next week and new events. We will keep making our daily news for you. Stay in touch. See you.